The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Wednesday morning, just after 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading following the election. Somewhat of a surprise from the polls, but we'll get into it. And it seems like Republicans will probably flip the House. They were probably looking for more than that. The market, some interesting takes in the Tiger's Den, and I would agree with them. Let me get the one that I like the most, saying if the market was pricing in a red wave, we go lower. And I would say that's possible, and it looks like that might be the case this morning from our man Tony F. I agree, because that was not what the market may have expected. But here's the kicker, right? If they get the House, is that enough? That, yeah, maybe you were looking for more, but maybe that's enough to stop further legislation that might have went through if Democrats controlled all three chambers, in terms of two chambers in the presidency, if they had all three branches. Nonetheless, we get to find out, folks. Market's a little bit lower this morning, but no huge reactions. You look at the S&Ps last night, look at the futures, right? You probably would have been best selling some volatility last night, as you had the S&Ps from 4 o'clock last night up until about 4 a.m. this morning in almost a 10-point trading range out there. On the S&Ps from 38.30 to 38.40, we're a little bit lower this morning. You got some numbers with tough numbers for earnings. Why don't we jump over to Disney, man? Tough losses in the streaming spectrum. They actually beat on streaming, but they miss a little bit on the parks and revenue. Guidance, not what you want as well. Profitability, an issue there for Disney, down almost 9% right now for Disney shares. That's the action overnight. You take a look at Disney on a daily, you're going to open at 91. The lows that we were talking about on October 13th, 90.71. The lows back here in July, 90.23. So you're going to be pushing those lows on the open. It'll be interesting to see how Disney trades. Jumping around to some of the headlines before we jump into all the action. And I like this headline. Biden dodges worst case scenario. Florida, DeSantis takes things by 20 points, man. You knew that was going to happen, bigger than you thought. That's the story for Republicans out there. But the story in terms of the House, not what you wanted for numbers. It'll be interesting to see how, if Republicans get a very, very small margin in the House, you could see that actually play differently than if they had a huge win in the House, because what you may happen is you may have some of the fringe members, some of the furthest members to the Republican side having a little bit more control if they're margin is that thin, something you've seen with Democrats when it comes to senators like Manchin, right? When they have a 50-50. If you're that close, the members that are furthest on the side of the party, sometimes they might not have the control, but it looks like in the House it's going to be a closer margin than you may have expected, although it does look like Republicans will claim the House. All right, let's jump around to some of the action. NASDAQ, negative by about 64 points right now. The Dow off 188. Bitcoin, boy, this one's going to be Harvard case study after Harvard case study, man. I was talking to my dad about it last night, and absolutely remarkable to see how the cards fall on this one. Tom Brady was a big investor, right, for FTX out there. You had the Ontario Teachers Plan putting about $400 million. Now, I think they managed like $24 billion or something like that. So even I was talking about that data this morning, 1 to 2%. And they probably thought when they were putting money into FTX that was one of the safer ways to get into crypto in terms of being with the messiah in some ways of crypto, Sam Bankman-Fried. And you know what's funny, folks? Yesterday when I was doing my program, right, they hadn't even sold to Binance yet. Yesterday when I was doing my program, this thing is moving so quickly like that. And today, right, I didn't even know how to pronounce his name yesterday. Well, boy, I know how to pronounce it today because I've heard it about 100 times over the last 24 hours. It's going to be an epic collapse. Hopefully everybody gets their money out of there. That deal's not done with Binance yet. That's why there's still rapid fear in this market here. They signed a letter of intent, Binance did, to buy FTX, and they can back out of that. So there's no way I would be waiting. If everybody's going to be made whole, right, then why not take your money out today and get your money, because everybody's going to be made whole. So get your money out. There should be no worry. If everybody asks for their money today and everybody can be made whole 1-to-1, then there's no possibility of a run on the bank. Not sure that's going to be the case, man, because this one came out of nowhere. And it's just a lesson yet again, folks. If you're dabbling in an area and there's a probability greater than zero, recognize that probability might come in. Many, I'm sure, many brighter than I in the crypto spectrum, right? Understanding what's going on there, just out of left field. And I don't know how that happens out of left field when you're managing that type of exchange. And you're just, he's out there bailing everybody out. And in my head, I was saying, man, boy, these guys that are rising to the top in crypto, right? They did things right. They kept themselves clean. They didn't get over leveraged. They didn't allow themselves to have any type of a crisis that we usually see. And what happened when they were around when everybody else crumbled? He was able to use that extreme wealth he had to bail them out, solidify it, and now he'll be the only one left. Not the case, man. Looks like the man in charge of Binance, is it CZ? Looks like he's running the show. And he has such a control over that whole area now that it will be interesting because he's going to be able to shape things a little bit more. You had him actually going against regulation more so, and you had SBF courting Washington, appearing before Washington. You may see the leader of crypto, CZ, now take that more combative tone potentially in the crypto sector and see how that goes. But nonetheless, this is going to persist, folks. Ethereum down another $570 right now. You jump over to Ethereum, down another $100. Ethereum was just at 1130, man. We were pushing 1600 yesterday, folks. 1600 yesterday. Remarkable. Crude down about 73 cents at 88.17 this morning. The gold contract quite a bit yesterday. We're going to jump over to some currencies. We talked to our man Teddy Kegstad at 40 past the hour today, as we do on every Wednesday. Great day to have him on as always. We jump over to the dollar index. Just currencies running so much right now, folks. You want to see the action, right? That move yesterday on the dollar. I mean, what's so remarkable about some of the charts going on, right? The move yesterday looks okay because we've had such insane moves over a period of just going back 5 days. We were above 113 on Thursday, and you just moved to almost below 109. We're sitting right at 110. But yesterday, you were almost at 109. That's a 4-point move in the dollar from Thursday to Tuesday. Those are not ordinary moves, folks. But you put the dollar on a daily, breaking pretty decisively. Now, we have a little bit of a pop today. Market opens in about 16 minutes. We'll see where the day leads us. But that was big action yesterday in the dollar. We jump over to the euro-US dollar. Just above parity right now. We've talked about this, bouncing off that trend line. We'll get Teddy's take on the euro-US dollar at 40 past the hour. We got to talk about the yen, man. Yen, backing off a bit, little bit of a pop today as well in the dollar yen. We jump over to notes and bonds. And pretty tame action. Yesterday, we had some movement in a big way. Higher price, lower yield. Today, just chopping around it at 110.05 right there for the 10-year. And we got to jump over to Meta, Facebook. They got some layoffs, man. How about 11,000 employees? And the market says, thank you. Finally, can we stop spending so much money, man? Facebook, they're going to catch a lift by about 5% right now, up to 101.47. Stay tuned, folks. We'll be coming back talking to our man Kevin Hincks from TD Ameritrade Fast Market. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We have the S&P futures right now negative by 17 points. NASDAQ 100 negative by 52. Dow off about 176. Let's jump over to our man, Kevin Hincks. Every trading day, folks, 12 noon Eastern time from the TD Ameritrade Network right here on Tiger TV Fast Market with your host, Kevin Hincks, Tom White, the team at TD Ameritrade Network, folks. They break down the day's market action. We got quite a day today. They walk you through hypothetical trade setups in the market. Kevin Hincks, what do you think of the market action this morning with everything going on? Good morning.
Good morning, Tommy O'Brien. Well, we have change, but we only have change in the slightest way. And if I have to say one thing to start the trading day, it looks like the VIX got it right. The VIX moving from, 30.95 11 or 12 days ago to where it is now at 25 pretty much is in line with where we should be with an election that, sure, there was change, but only very slightly. And I think with the Republicans probably going to take a small advantage in the House and the Senate still up for grabs, I think this market is now looking past the elections and to election data or to economic data and earnings. And Disney with a horrendous miss in earnings last night, but Meta coming up with some good news today. And tomorrow we look for CPI data that is probably going to be a little ugly, Tommy, and not going to make anyone feel better about the fight against inflation.
Yeah, I got Meta up here on the Thinkorswim platform trading right now at about 101.64, a nice lift from about $96 on the news that they're laying off more than 10,000, 11,000 employees. Quite the number. It's interesting, Kevin, that how long can some of these equities, because we've seen each time that they've had the layoffs, whether it's Meta or some of the other companies recently, some of these companies getting a lift in their share price, understandably, because expenses are such a big issue right now. But is that causing you a little bit of worry? Because every morning it seems like we're waking up right now. I'm seeing a couple companies. Now, Meta's its own deal. I get that one, man. They are just, they got to cut something over there. But it's happening throughout right now. And I imagine at some point, it's not going to be a good thing when we keep getting these layoffs from these companies for higher prices in the market.
Yeah, Meta's story is unique to Meta platforms today, and probably something that Mark Zuckerberg should have done on the earnings call, right? He made a statement, the number of additional steps to become a more leaner and efficient company by cutting discretionary spending and extending the hiring freeze through Q1 while laying off about 13% of the staff. Now, full disclosure, Tommy, he's hired about 10,000 people this year. So the fact that he's laying off 11,000 is just kind of a reversal of what they've been doing up till now. But that's what Mark Zuckerberg needed to do on their earnings call that he didn't do. That's why the stock got punished. So a little bit of relief there. So the rest of what we have going on, all these microeconomic stories about layoffs, Tommy, they all add up to a macroeconomic look. And eventually these employment levels, the JOLTS data, jobless claims, unemployment, non-farm payrolls, they've got to start coming down with the rest of the overall market. So there's probably a bit of a lag there. But, those numbers are going to start to add up, Tommy.
It's such a cool market right now because bad news, good news, bad news. We're going to get that shift eventually, man, because right now layoffs are a good thing for most companies because guess what? They're spending too much money. The margins are in trouble. They're not bringing it to the bottom line. Maybe they're having some tough guidance, Disney with some tough guidance coming down the line in 2023 in a big way for sure. And it's going to be an interesting 6-12 months, man, when we try and make that transition as the Fed is trying to see a difference. And we get CPI, like you said, tomorrow. So we march forward, Kevin, and I agree with your sentiments, man. It looks like Republicans will probably gain the House outside of a pretty big surprise at this point. The first take is no real big things getting done over the next couple of years. We got a debt limit we got to get through. We talk about the economic numbers. You almost said elections again. Do we start doing the presidential deal throughout that, or are we just staying on the Fed because, Trump making an announcement within a week? It seems like things are going to heat up right away. And no matter what happens, as long as Republicans get one chamber, which it looks like they have, it's going to be gridlock for the next couple of years, at least until, 2025 almost on the national spectrum in terms of legislation in any big way.
Yeah, if what happens as the result of this election stops the spending, stops the Biden administration's ability to just spend and keep inflation elevated, maybe, Tommy, inflation will start to come down, actually, as interest rates go higher, because the spending has kept up so far with the interest rate hikes. So, yeah, I think gridlock, the markets prefer gridlock, Tommy, but we've got some other things going on with the market right now, as you know, and so it's going to be interesting to see how it plays out.
I can't wait. I mean, we got the open, folks, in 6 minutes. And even today, tomorrow, because digesting a little bit of a surprise from the polls. But, folks, if you've seen anything, man, the polls, they swing one way, they swing the other. But the real impact, I think, Kevin, is kind of there in terms of Republicans get one chamber. That's enough for some gridlock. That's probably what was going to happen anyway with Biden in there in the presidency, no matter what happened in the House and the Senate. And so we go forward from there, and we get some big economic numbers tomorrow with the CPI, as we know. With that in mind, Kevin, we still got some big numbers for specific equities. What are you guys talking about on Fast Market at 12 today?
Well, like Folio is going to do a presentation on Ralph Lauren as we start transitioning to the second half of earnings season and get into apparel and retail and things like that. And then we're going to look at two of the stocks on the move today, Tesla and Meta. We're going to trade Meta based on this new news, the layoffs, and Mark Zuckerberg finally saying what he's supposed to be saying. Yeah, we're going to get back in there and trade this thing, Tommy.
It's got to find a bottom eventually, folks. I'm not sure it's there, but boy, it's on a one-way trip. And today you're getting a lift, though, up to 101.67 for Meta shares. Kevin, I appreciate you taking the time on a busy morning, a busy day, a busy week, man. We look forward to the program, and we get to talk to you tomorrow one more time after those CPI numbers tomorrow morning. Can't wait for that one as well, man.
Have a great day, Tommy.
You too. Folks, tune in every trading day. You heard it. They're talking about three great stocks. They're talking about Ralph Lauren. in the opening segment with Ralph like Folio. I'm a big Ralph Lauren fan, folks. I'm wearing one right now. What can I say? The marketing got me. You know, Ralph Lauren polos, the marketing got me. What can I say? I got the chart up on the Thinkorswim platform, 95.15, backing off from 135.99 earlier in the year. But this thing's been chopping around since about May at $95. And let's check it out. On the Analyze tab, you jump over to the earnings. Their numbers out tomorrow, and you're looking at a decent move for Ralph Lauren. $6.74 for their numbers, 95.15. All right. We jump around to what else is going on. Roblox, one of the companies they covered yesterday on Fast Market, out with their numbers. Not so much. Down to 34.55, 32.66 was the spike low. And we're sitting right now at 34.62. So you're going to be down about 13% for that equity. As they miss on their numbers, you pull up the weekly, man. This is just a tough deal, you know. That Fibonacci does not belong there at all, as we are well below that one. And let's see. Even on a bounce, did we get to the 318 on this thing? That'd be pretty killer if we did. No, not even close. We only bounced to the 236. Maybe you chop around for a bit. We were just trading on this equity a few weeks ago at 33.12, 33.20. So you're going to open at about $35 for Roblox. All right, folks, it's going to be an interesting one. We get to see the market reaction. And what's so interesting is no matter what happens with the elections, right, pretty much what the market was anticipating, okay, Democrats don't control the House and the Senate and the presidency all together anymore. But guess what? We got other things going on, as Kevin said, and we're going to go right next to the CPI is what this market's going to maybe anticipate as we come into the trading day. Stay tuned, folks. We'll be right back for the open.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kakestat's Tiger Forex Report. Teddy Kakestat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open, and you're looking at an S&P right now, negative by about 24 points, trading at 3810. That plunged yesterday afternoon. We were trading just under 3,800, so we're coming towards that level right now. The NASDAQ 100 sitting right at about 11,000. Now, the NASDAQ 100 made it down about 50 points below where we're at right now, 10,950. Interesting that we're kind of right where we were at about 5 a.m. as well. Dow off 178 right now. You got the Russell off by 17. Crude off a $1.22, trading at 87.66. Let's see how the dollar index is trading. DXY 110.20 on the dollar index, and we jump to gold right now, sitting at about 17.15. Now, interesting that gold gets a huge acceleration yesterday, partly to do with the dollar index, right? We've had a little bit of a reprieve on the dollar index, and gold hasn't given it up, right? So you have the dollar weakening from almost a full point, and meanwhile we've clawed back 70 ticks, you could say, as in we've gone from 109.50 to 110.20 on the dollar, and you haven't seen gold really pull back from those highs at all as this market deteriorates a little bit. 38.06 on the S&Ps. Let's see how some of the companies that are trading on the open. Meta up 5.7% on cutting 11,000 jobs. Roblox with their tough numbers down about 10.8, but they get a little bit of a lift on the conference call this morning on their numbers. Tesla down about 1.4% for Tesla shares. So, and let's check Disney, as we jump around. Disney down about 9%, no real lift for Disney on the open. So getting into the details of the Disney numbers, they miss on earnings, they miss on revenue, not what you want. They did beat on Disney Total Plus, and you can see the shift in this market, man. This type of a beat in a growth market, growth stock bull market, was where this stock would just accelerate, man. But that's not what's going on right now, folks, okay? The market cares about profitability in a time of high rates, high inflation, decreasing margins. I mean, Disney Plus is just crushing it. They're not crushing it when it comes to profitability, though. How much did they lose in Disney Plus over the last 90 days? How about $1.47 billion direct-to-consumer division lost in 90 days? Now, they also reported a 10% drop in the domestic average revenue per user to $6.10. The company set to hike prices, though, in December. That's going to get them some higher prices there. Now, what's interesting is you look at the just raw total numbers, all right? They added 12.1 million subscriptions during the period, bringing the total number to 164.2. Yeah, 164.2 million subscribers. Now, that's worldwide. I don't know the details exactly. I know they got a bunch of subscribers in India. That's a very low average revenue per user, et cetera, okay? So that matters. But nonetheless, okay, Netflix, 223 million. Yeah, and if you take Hulu and ESPN, which Hulu's at 47.2, ESPN's at 24.3, you add them up, it's at 235. But here's what I think is probably happening. They're probably including these in the bundle, I'm guessing, right? Like if you order the bundle, do you get counted for all three? I'm guessing you do. The only reason that's not even a little bit misleading, is completely misleading, is because I sign up for the bundle and I sign up for Netflix. So am I getting counted 3 times in this cumulative total? That's the new word of the day for the Fed, cumulative. I probably am. I'm not sure if anybody knows in the den how they count those, but I'm betting they do. Because if I sign up for the bundle, I'm signing up for all 3. You add all 3, they're getting money for all 3 in some capacity. But nonetheless, Disney Plus alone, 164. Netflix, 223. And Netflix had about a 10-year lead on them. It's pretty crazy where they've caught up. But that's the number they care about. They're going to achieve profitability in fiscal 2024 is the number they're looking for. That's 2+ years away. Where are we going to be? Where rates are going to be at that time, right? There's a lot of volatility and unknown that happens over that time. Record results in the parks, experience, and product segment, but they missed to some degree. Let me get the exact sentiment they said, because they definitely did. Media and entertainment, all right, I'll pull it up. Yeah, fell short of expectations for profit and key revenue segments during the fourth quarter. Missed expectations as both its parks and media divisions underperformed estimates. Okay, so they might have had a record quarter, but the expectation was for higher for that company. All right, we jump around to what else was going on. I talked about Kevin. I couldn't get the name in my head. But yeah, I was thinking of Redfin. They're down as well, cutting 13% of the staff. They shut down the home flipping business. The company's workforce has shrunk by now 27% since the end of April. Home flipping right now, folks, in a business of that size, I don't know how that happens, as in, yeah, that is almost impossible right now when rates are just going through the roof. More than 860 workers, or 13% of the staff. For Redfin, we pull up Redfin. What's their symbol? RDFN, there it is. And they're down 4% on those numbers as the market's a little negative, but pretty calm action right now. As we open the day after Election Day, and we got a VIX that's backing off at 25.45. It's going to be an interesting one to see which way the day goes on this. Market probably doesn't care in terms of the discrepancies. Not going to get into the full politics of it because guess what, folks? No matter what happened, as long as Republicans got one chamber, that was enough to push total gridlock. It wasn't like if they controlled the House and the Senate to a huge degree that they were going to pass legislation. Nothing's getting done. You're going to have a Republican-controlled House, a pretty close Senate no matter what, and a Democrat in the White House for the next 2 years. And the and the presidential election begins basically within a week, when probably Trump is expected to announce, and we'll see what he says. Nobody knows, okay? And then we go from there. And 2 years goes fast, folks, because the primaries start before you even know it and time flies. So it'll be interesting how it shifts to that. But try and stay current. We get the CPI data tomorrow, and that's going to be an important one for the Fed as they're going to watch those numbers, and we'll see where we go. But eventually the layoffs are going to matter, folks. There's going to be enough layoffs that, guess what, the market's going to say, okay, we know that there's a recession in. We know there's negative tendencies in the market. We know that that's going to get inflation under control. And the moment that shift happens, layoffs are going to be a bad thing because then the fears are going to shift to recession, downward spiraling economy, right? No one's spending money, layoffs, lack of income, all of that stuff. So, but right now we're not there yet because we're seeing these. Now Redfin's down 4%, okay? But this is what you're going to have to see across the board. And eventually you're going to have to see them in the actual jobs numbers in terms of the economy, not just company by company. Because, yes, that's a 13% layoff. But, folks, that's 860 workers. Okay, and it gets a full headline on Bloomberg that I've just talked about for 3 or 4 minutes, and we're talking about 860 workers. And meanwhile, we're adding, 200, 300, 400,000 workers every single month. Folks, if we're adding 300,000 workers in a month, that means we're adding 10,000 workers a day on the entire country. So if we're adding 10,000 workers in a day, when you're adding 300,000 for the economy, don't get sidetracked by one article where there's 860 layoffs, even though it's a public company, it's 13% of their workforce, all right? The Fed is going to wait to see that shift in a macro perspective across the country, and it's just not happening yet, even though we get these headlines. But guess what? Meta, 11,000? Yeah, that's a decent number. Okay, but guess what? Meta's like the poster boy for should be firing workers and cutting costs. All right, folks, stay tuned. We're going to be coming back with our man Teddy Kegstad. We'll talk some currencies. We'll talk some crude. We'll talk some treasuries. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We have the S&Ps right now trading down about 30 points. That's 0.8% in the red, right at about 38.05. And do we have our man Teddy Keckstown on the line now? I think we may. Here. Okay, perfect. Teddy, good morning, man. Folks, you can reach Teddy every trading day. Sign up for the Tiger Forex Report. Check it out for 30 days. You get the archive of the webinar that he just did. And Teddy, some great calls in the letter this week, man. Where do you want to kick things off on a pretty interesting day in the markets and in general?
Well, I think we have a little bit of a pause going on now today. You know, we had some really good market action the past couple of trading sessions, really from Friday going into yesterday's trade. So I think right now you have kind of like just a little stabilizing profit-taking action going on right now. Overall, the dollar's in a correction. I think today it's showing a little strength just because, you know, you have the bonds that are down a little bit. The 10-year's down a couple, I think like 4 or 5 ticks right now. You know, so I think that's what we're seeing right now is just that. It's just a little profit-taking move. I wouldn't doubt that you're going to see yields kind of pull back a little bit more, and I think that'll also add a little pressure to the dollar over the next couple of sessions.
Yeah, quite the move in the dollar. I referenced it at the beginning of my program saying, man, you know, the move today doesn't look that big. Meanwhile, and I just have it going back right now, Teddy, on a 15-minute chart, just 5 days, and I have the Thursday high in the dollar index above 113, and we were pushing almost 109 yesterday, so we're catching a little bit of a lift today, but nothing compared to kind of that run we've had. And what do you anticipate? I mean, what did you credit that move? I mean, that was quite a move from 113 to 109 coming into election day. What do you attribute that kind of negative market action? Is that just general statement that we may be pulling back there, or what do you think of that move, and is that going to hold, I guess, or if you can give us, you know, some of the information you talk about in the Tiger Forex Report just for the dollar and the general trend, short term versus long term, because that's quite a pullback, man, in over 3 or 4 days. Sure.
Well, you know what? I think it's really just a corrective pullback, to be quite honest with you. I really don't think that, you know, there's too many people that are becoming dollar bears right now, you know, and saying inflation's going to die down and stuff like that. I really think this is the calm before the storm, to be quite honest with you, going into the holidays. I mean, I can't see how we're not going to see an explosion in energy prices over the winter, you know, especially like, I would say that probably come December's rollovers for the financial futures is going to be probably a nice normal rollover, and then it's going to get crazy as far as going into the new year with March contracts and stuff like that. I think the volatility you're going to see across the board is just going to start to ignite going into the holidays, and I think that what we're seeing right now is just a little bit of a stabilization period. You have the ECB, you have other central banks around the world that are now kind of doing what our Fed is doing, if you will, to some extent. So that's lessening the blow that the U.S. dollar and the Fed has had on these other markets. It's just slowing things down. The trend with Powell is still that there's going to be an aggressive rate hike, going on until next year, until they really see inflation, pulling back, or that we're in a recession. So, that's debatable right now, depending on who you ask, is whether or not we're in one.
Yeah, if we are, maybe it just has to be a tougher recession or whatever it is, because I was just talking about the jobs, right? It seems like in companies, rightfully so, because if I'm a shareholder, man, I almost want companies like to go bare bone, man, cut it all down right now if you can, and save some cash. But eventually that's not a good thing for the market overall, but we're not even close, man. We're getting 200, 300, 400, 500,000 jobs almost on some of the months on a pretty recent basis. And that's just not how things have to go, I think, for a turnaround to take place. Euro. I checked the euro before you came on. We're sitting right at about parity. So I know this ties in basically to the dollar, of course. But what do you think about the euro sitting at basically a parity on the dot right now?
Well, you know what? Yesterday and even today we're butting up against, multi-week highs, So, I think that right now you're seeing this little pullback this morning. It's just a little profit-taking move. You got to realize the euro went from 97 up to, almost 101, in a period of a few sessions,
Yeah.
So, and I think that right now what we're seeing just today, this morning, is a pullback. When the dollar originally started out on the trading session this morning, it was in a totally different, direction. So this little pullback, I think, is just a profit-taking move. And I would watch what happens to the bond, the yield curve. If they start to pull back again, and you see a rally in the bonds in the 10 years, then I would bet you that you're going to see the euro U.S. dollar higher on the day actually today. So I got a really good feeling that this trend right now, this is just a pullback, and that we're going to probably at least spike high over the next couple of sessions just to push things a little bit. Yesterday, the yen, the euro, and the pound and multiple currencies hit their 50-day averages, or right around there. So the averages, when they're, moving averages are great for showing trend when there really is a trend. So that right now the downward, sloping average becomes resistance. Is it going to be real resistance? Well, that remains to be seen. But that's where we're flirting with right now, and there's no reason why we wouldn't spike in there, just flirt with it, and then see that the dollar comes back, roaring back with strength, and makes, new highs against these other currencies still.
It is pretty interesting on the CPI and just the overall sentiment of how long things are going to take potentially to cool off and where the Fed goes. You're obviously looking for some hot numbers if you're going to see that persist. Is that something that, begins in the short term, as in tomorrow? How do traders, with what you're putting out there, right? Where are you looking for the action to be tomorrow on the CPI? Is the market going to react that short term, or is this something that's already factored in? Because it's almost like you said, yes, the Fed may begin to stop raising, but that's like a bull case. It seems like the normal case is the bull case, because that's the best case scenario. What's the bull case if that's not the bull case, right? The bull case is we're kind of there and things are going to get better pretty soon because, boy, the Fed's been hiking pretty rough. It's like, okay, well, that's a pretty hopeful case. And then the other side of things is that, boy, things persist. So does this, as in, do these things start happening 1 month, 2 months? Where do you look for maybe that dollar, let's say, to really start the next leg higher on a time frame basis? Or are you just looking for price action?
Right now, I'm looking for price action, and I think that the leg higher is going to happen over the next month or so. I truly believe that we're going to see dollar strength going into the first quarter of next year. That's when you're having to start looking at where things might start to turn around, because Powell right now, eventually they do have to start at least cutting back on how much they're raising the rates. That's going to start to slow things. And as like the other central banks continue to do half points, and let's say we go down to a quarter, that's going to start to weaken the dollar versus these other currencies in the short run, So, but I think definitely going into the first quarter, the dollar is going to be the bull, and then next year is when we're going to start to see the turn, especially politically. If Powell actually falls to political pressure and starts to stop raising rates, not cutting rates, but just stop because of whatever pressure is coming from, Washington, that would have a big influence also on the dollar as well,
Sure,
So,
yeah.
but I just don't see that really happening. And I think that we'll have to wait. That's months ahead of us right now, and at that point, you'll see the dollar much stronger. You'll see the bonds much lower. You got to remember the yield curve has been growing at such a rapid rate. It needs a pullback too. That would be healthy, even if it's not because of cutting rates, it would be just an easing on the rate hiking, So, and I think that that's what we're going to start to see come next year, but not until then.
You make some great points, man. I agree with a lot of them. It's pretty interesting. I saw the headline today. I think it's 7.14%, the yield on the 30-year mortgage. And with that in mind, right, we have the chairman with the rhetoric he's saying we're going to be higher than the market thought. We're going to keep going. So I agree, man. We'll see. Teddy, thanks for the time as always, man. We'll talk to you next Wednesday.
See you next week. All right, guys.
Stay tuned, folks. We'll be right back. Check out that Tiger Forex report on the front page on the newsletter page.
TFNN has just launched their new trading room, the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all Tigers and Tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We jump over to Coinbase, down another 4.5% today. We got Bitcoin right now down about $535. Coinbase. So Kathy Wood, she was out there buying some more Coinbase on the discount yesterday as this thing was trading down with crypto trading down. yeah, it's a dicey area to get into any of this, and maybe Coinbase would be the play as a regulated public company to some degree. But boy, it is the wild, wild west in crypto. I was talking to my dad yesterday. Whatever you put into crypto, man, even if it's Coinbase, make sure it's all risk capital, folks. Make sure it's all risk capital. Okay, you're buying 100 shares of Coinbase. Make sure you got $4,800 that you can lose in that equity, because you don't know. Anytime you hear the CEOs having to come out and say that they're not going to have a liquidity crisis, they might have a liquidity crisis, because if you have to deny it, there's a risk that it might happen. Otherwise, you wouldn't have to deny it. And if there's a risk it might happen, then it might happen. Otherwise, it wouldn't be a risk it might not happen, if that makes sense. Okay, let's jump around to some of the FANG stocks. Amazon, down 2.2% on their number, on the market action, really, with the NASDAQ down about 100 right now. We jump over to Tesla. Elon, selling some more Tesla, but that was pretty much known because he was going to have to raise some extra money. He sold about $4 billion in Tesla shares. We jump over to Microsoft shares this morning, down about 0.6%. What was it? Was Salesforce laying off, I believe, as well? Salesforce down 1.5. Negative action across the board right now. We jump over to crude. Pretty interesting that we've held crude at 87.25, as in we've held, you look at even a minute chart since the open, 10, 15 point range. We come into the market down close to 1%. We're hanging out at that area, and we got a VIX at a pretty volatile, low volatility level. And what do we got tomorrow? One of the biggest data points of the month, CPI, tomorrow morning, folks. I'll be back at 9 o'clock tomorrow morning. Stay tuned. We got our man Basil Chapman coming up next with the Tiger Technicians Hour. Then we got our man Steve Rhodes. Fast Market at 12 o'clock. You heard him. They're talking about who? They're talking about Ralph Lauren. I love Ralph Lauren. That's a personal bias. I don't own any Ralph Lauren shares, but I'm going to listen to Fast Market. Maybe I'll buy some. Larry Pesavento at 1 o'clock, folks. Dave White at 2. Tom O'Brien. My dad from 3 to 4. And guess what? It's my dad's birthday today. Happy birthday. Wish him a happy birthday, folks. He's going to do a show live at 3. Have a great one, folks.